Okay. So this is the second of a series of three trade analysis breakdown videos, primarily focusing on the trades of the past week, really focusing on Friday, April 12th, as that was a really volatile day, a lot of volume in the market, and unfortunately we didn't capitalize on all the moves that we wanted to. However, we did have some pretty solid setups that we can go over and use to tighten up for moving forward for next week. So taking a look at gold, naturally our analysis begins on the 4 hour time frame. We started Friday during pre-London, so we came on at approximately 2 a.m. So this was the 4 hour candle that closed at 2 a.m. And as you can see, prior to this, we had a significant bullish run. And then on this 4 hour candle from 10 p.m. Eastern time to 2 a.m. Eastern time, there appeared to be a bit of an exhaustion, but likely a continuation of that gold bullish pressure, driven from some fundamental aspects. For those that are tracking the geopolitical tensions in the Middle East, especially on Friday, as there were pending news of an escalation by Iran to attack Israel following Israel's supposed attack on an Iranian embassy, killing two generals in Syria. So just given that impending attack, more than likely we would have seen some bullish pressure on gold as well as oil that we've already reviewed. So let's dig directly into the analysis here. Let's start on the 1 hour chart real quick. We could just do a few key levels here. Potentially, even though these aren't in play, granted, I already know what happens later on in the day, but so these levels will be valid at a later point. Okay, throw on the indicator. All right. So at the start of the day, coming into London session, we were clearly bullish, right? Again, Asia session pushed up bullish. We were trading above trip line, so trading above the 50 percentile, and at this point already trading above the previous day's high, yesterday's high. For whatever reason, though, myself and the other folks online, we actually had a plan for continuation buys above Asia high, even though if you took a fib from the Asia high to, Asia low to Asia high, you could clearly see that we had put a high in and actually retraced 50% and had held trip line as well as the 50%. So wouldn't be surprising if we did buy up to Asia high. However, if we decided to have our trade idea actually trading above Asia high. So we wanted to see breaks above Asia high, and then we would start being interested in buys. Some of that thought process really just was we've been significantly bullish for the last 2 days. Asia session was bullish, so we weren't quite sure whether or not London would come in and actually give us a bit of a exhaustion, so a pullback before we continued buying. So that being said, just thought that the best way to approach this particular trade setup was let buyers show us that they're still interested in pushing the price of gold up, and the way they do that is to make a new high and break above Asia high. So that was our trade idea. And on the 5 minute chart, as you can see on the 5 minute chart, we actually did get some signals that did go. But again, our trade idea was break above Asia high. Okay, so let's take a look at it on the 15 minute chart. So at this point, we've put in a new high, right? So this is the low that's put in this high. All right, so we could get rid of this fib here. Let's wait for an actual high to be put in. I like to use pivot points, the pivots indicator, to really just tell me that a high has been put in, and then that's when I'll look to draw my fib. Okay, so the high has been put in. All right, fib from high to low. Okay, and now we're looking for a pullback to 50%, and then we can start entertaining some signals. All right, so now we have that pullback to 50%, getting that rejection as we assumed that we most likely would have. Another pullback. Looking at this, right, if I scale down to the 5-minute chart, that looks like a double bottom, right? So we put in a low, come back, and now we're putting a higher low, right? So we're failing to break these lows, but still double bottom-ish, right? So something to keep in mind for looking for these continuation buys, right? Okay. Now I'm just looking for a signal. All right, so we get a BB signal. So this BB signal, what do we have here? Well, we've already had a pullback to 50% to the golden zone and we've rejected, right? It's a BB signal. Also having a slight breakout back above Asia high. What was our original trade idea? Continuation buys above Asia high. Great. If I'm looking at it from a divergence standpoint, I'd say that we have some bullish hidden divergence present, because if we take a look at this to here, this incline, and now the same pivots on the RSI are declining, right? Which we know is a sign of hidden divergence. Okay. Hidden divergence being a bullish continuation, a continuation sign. In the case of this instance, it's a bullish continuation. All right, so what do I have here? Well, I have my RSI on 3 different time frames is overbought, showing significant bullish pressure. I have a breakout back above Asia high. I have bullish divergence showing me trade continuation. Irregardless of the outcome of this trade, this is a valid trade to take some risk on. If we're just being systematic about our stop losses, I like to reference the ATR, the average true range. So for this candle at this point, average true range is 3.8. So 2 times 3.8 will be approximately 7.8. Oh, excuse me, 7.6. I'm tripping. Okay. Let me get one more pip. Okay. All right, 7.6 stop loss, all right? And then naturally we would know that we're targeting these extensions here for our first targets, and then we can just look to see what we're looking to do after the fact, right? And have to, okay. Get this. Okay, and we blast through our first target. Well, however you wanted to do it. If you wanted to do a negative 27 extension or a negative 61.8, we hit both targets there, right? So that would have been a winning trade. Granted, you would have been able to scale down, if I'm not mistaken, and probably catch some setups on the 1-minute chart. But I believe the 15-minute setup was the best setup there, and that was a good setup. And now, bear in mind, again, I know what happens for Friday. This is just review, so it actually goes a bit higher. All right, so you would have been able to squeeze some out, but then later in the day, as is the case oftentimes on Fridays, we had a late day sell-off, right? So where the market completely reversed. And as you know, we like the trade in line with the 4-hour 14 EMA, that being this thick, jagged black line right here. So even though the market began to reverse, we wouldn't be looking for sells until we start trading below this 4-hour 14 EMA, right? So bear in mind, take a look that currently the 4-hour 14 EMA is around yesterday high and Asia high, which would be, Asia low, which would be a very good area of interest to possibly look for some trades. So if we just wait again, granted, we would have to forego this if we're trading in line with the strategy, right? Just trying to wait for a price to do what we needed to do. And then let's scale down to the to a lower time frame to see if we were to get anything, because just from a strategy standpoint, when we see a significant drop like this, aggressive drop, more than likely we have to scale down to the lower time frames to even participate in this type of move. Okay, so let's take a look on the 1-minute chart. And now again, this was yesterday high and Asia low, so I consider this a 2 horseman area where 2 key levels, again, yesterday high, Asia low, and I put a key level between them. So the trade idea here is looking for a 2 horseman break and retest. Okay. So now if we just take a look at it again, once again, we're having an aggressive push to the downside, right? The hourly indicated by this, even though we're on the 5 minute chart, these are 5 minute candles inside of a larger 1 hour candle. So I can see that the hourly did slightly break out below Asia low, right? We've also broken back inside the range of yesterday, breaking back below yesterday high, which is a bearish sign. I've had an EMA cross on the 5 minute chart. I've had an EMA cross on the 15 minute chart, all bearish signs. And now I'm seeing a slight little wick rejections. And while I get a B trade here, previous 15 minute candles bearish. I know my 4 hour was bearish and this significant bullish or bearish pressure into the market. I can decide to take this trade. ATR is 2.9. Let's just round up to 3. So let's do 2 times ATR will put us at 6. 6 puts us just slightly above Asia high or Asia low. And let's target a 1 to 3. And again, the reason for this is simply we are having a break and retest of this 2 horsemen. Price has been pushing bearish extremely strong. And I'm also seeing some hidden divergence on the 1 minute time frame. If you take a look at this peak to this peak, it is a declining slope versus on the RSI, the same peaks. Notice it's an upward slope. And this is even, so again, hidden divergence is a trend continuation pattern. And more importantly, when you see that hidden divergence and it's now rejecting the curvature of the RSI, rejecting the 50%. So now we're rejecting that 50% bullish, right? If we're saying above 50% is bullish pressure, when we come above 50% and drop back down, that's that rejection of said bullish pressure, returning back to that bearish pressure. And just like that, we I believe we hit take profit. There we do, hit take profit there. So notice, so this is more so just a patience play, right? So if we had taken both plays, notice we would have been into some buys around the start of New York session, all right? The start of stock market open, just before that, around 9 o'clock, right? Get a significant move to the upside. There's opportunities to make money. But then we get that Friday reversal where the market reverses. And notice, if the market began reversing at 11:05, we didn't get anything valid on the strategy until 1300, right? So that's 2 hours we had to sit and wait essentially for our rules to be met. But for 2 hours is a 2 hour wait worth, a 1 to 3 trade that goes 1 to 3 in 1 hour, right? So I wait 2 hours to take a trade where I win 3 times my risk. And as you can see, we could have made even more if we held that longer. So really just want to highlight the concept of setups over signals, right? We want to take signals in line with the plan that we've already set forth and in line with logical schools of thought. As it relates to the last trade that here showed on the 1 minute time frame, logically we have shifted back into the range of yesterday, right? Below yesterday high. That is bearish sign. We've broken Asia low. That is a bearish sign. We've also retested Asia low again and rejected, a bearish sign. It's worth putting risk on this trade, whether it's a winner, whether it's a loser. It's a validated trade. And that's all on gold trade for Friday.